Ladies and gentlemen, good day, and welcome to the Q3 FY22 results conference call of Motherson Sumi Systems Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I would now like to hand the conference over to Mr. Vivek Chand Sehgal. Thank you, and over to you, Mr. Sehgal.
Thank you very much. Good afternoon, good evening, friends. I think Q3 saw a recovery in global production with chip shortages easing a little bit. I think it's been a very tough environment with a lot of moving parts, and the board felt that the Q3 performance under such circumstances was much better than what was expected.
I would request participants to please stay online. We're just trying to reconnect the line for Mr. Sehgal, requesting all participants to please stay connected. This is a request to each participant connected to this conference, we are trying to reconnect the line for Mr. Sehgal, requesting you all to please stay online. Thank you. Ladies and gentlemen, thank you for patiently holding the line. You have the line from Mr. V. Sehgal connected. Thank you, and over to you,
sir. Sorry, friends, there was a disconnection. As I was talking, Q3 had seen a recovery in global production and the chip shortages easing a little bit. However, supply chain challenges continue. And in such a tough environment, the board actually felt that Q3 performance was very strong, and a 14% increase in both revenue and EBITDA on a Q-on-Q basis was well done. We have still more challenges to come with, but I think day by day it's becoming better and better. We expect the global production trends to improve further in the coming months, which should help our performance globally. However, higher costs and other moving parts like shortages, etc., are going to be a challenge, but we will do our best in the coming time. In this quarter, we have also received the final NCLT approval, which now gives us effect to the proposed reorganization and lays the path for future growth of Motherson, what we call 2.0. I would like to thank all our shareholders and friends for their continued support. I'm sure Motherson 2.0 journey will be even more exciting for our shareholders. The best is yet to come. I hand you over for your questions. We have pleasure to answer them.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vinay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. Encouraging to see sequential revenue pick up across verticals of Motherson. My question is on CKC. CKC side, we've seen that the EBIT margins have actually compressed sequentially. Could you talk a little bit about that what part of it is actually sort of driven by mix and what is driven by any one-off costs also? Thanks.
Sure. Pankaj, can you take that, please?
Thank you, Chand sir. Basically, in PKC, we have been hit in two geographies. One is in China, but if you look at sequential, it's more coming from North America, where the volumes dipped and the supply chain issues became more and more pronounced in the last quarter. And that led to very erratic supplies of parts, both at the customer end as well as at our plants, leading to higher costs. And China volumes remained low in both the quarters compared to the past by about 60%. After the emission changes, the volumes have not picked up to that level. As the inventories are in the market, and we believe that in the next 3 to 6 months, those inventories should get exhausted and the market should come back. Thanks.
And sir, in absence of China recovery, where do you see PKC margins settling? And also earlier in the previous quarter, we talked about 2 new platforms starting in PKC, so there were costs associated with that also that came in Q1 and Q2. So those costs are not there in this quarter. Fair to assume that?
Yes, those improvements have taken place, and all the support which was given globally has been withdrawn. The plants are operating on their own. So those additional costs and expedited freights which were there, they have been taken care of.
Right. What kind of numbers do you expect then in case China does not recover and the US, because demand is much stronger on the US side. So there is good visibility on recovery there.
See, there are multiple challenges as you have seen in the market that the demand has been there. The demand is quite strong, and yet the production is not. It's quite thick because of the material shortages. So that's taking the toll because sometimes the plants are running for the customers and sometimes they have to go for shutdown. Secondly, there are certain issues which are relating to supply chain and the inflationary trends in the market, including the wages which have been growing at abnormal rate in this period. We are taking care of them. So many of the challenges are being sorted out internally by optimizing the cost, and some of them are being taken care of with the customers by working jointly together with them to get to a normalized level.
Okay, sir. Thanks. I'll come back in the queue.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. My question pertains to PKC, so just continuation of earlier question. Would it be fair to say that China business is largely through JV and hence would not have impacted EBITDA margins for PKC?
It does impact because out of the 3 JVs, 2 are consolidated.
Okay. So that has direct impact. And would there be any copper price related impact in PKC or rather for entire wiring harness business, would the peak of copper price impact be behind us?
Copper price impact has also been there because you know that the trigger is like every 6 months the prices get adjusted based on the past trends, and still the copper price has been at a high level. But the kind of impact which is there in the past, say 6 months ago, is reduced, but still there is a copper lag which continues.
Okay.
As it has remained at a high level of around $10,000.
Right. Okay. Understood. Second question pertains to SMR. So we have seen a reasonably high impact here on margin. So this is primarily largely led by resin cost increases or anything else is there?
Sure. Vaman, would you want to take that or would you want to give it to Rajat?
Yeah, I think Rajat can answer this.
Okay, great.
Yeah. So it's been a mix of issues. I mean, of course, the volume that has been impacted, because of the chip shortage. That's the primary driver. And then, of course, there are headwinds on commodities. So, resin prices have gone up, and aluminum also is a part of, the commodity where so it's a combination of various factors. But as you see, quarter on quarter, we have recovery on the sales side, and you would also see, therefore, that the margins are also following the trend, and we have improvement there. So definitely, I think there are a lot of things that we continue to work upon in terms of optimization of cost internally and also working with the customers. I think we would see improvement going forward as we see the sales also going up. So I think this would show an improvement as we go forward.
Okay, because quite a few other commodities, including aluminum and maybe even resin prices, also might still see further increases given the increase in crude prices. So you expect near-term pressures to sustain on margins, or because of operating leverage and improvement in production, there should be still sequential improvement on SMR business as such?
Yeah, you're right. We do see still, I think in the last few months that this commodity price is still continuing to go up. We've seen the same on the aluminum. We've seen the same in the resins also. So we were all hoping that this would kind of stabilize in this quarter. We'll have to wait and watch how this plays out. It's anybody's guess at this moment. But then we are on top of it and seeing what is the best that we can do to manage it internally as well as in discussion with our customers. So hard to say how it moves in the next few months. We'll have to see how it goes. Yeah.
Sure. But clearly we are seeing improvement in production levels in SMR and SMP because of underlying improvement at OEM level, right? That is the positive thing.
That is there. The volumes have, the chip shortage challenge is not disappeared. It still is there in pockets, and it keeps on coming back in different shapes. So I think we would have still some continued pressure on that side. But overall, if you see, the volumes have improved. Q2 to Q3, the volumes have gone up, and what we can see in terms of EDI is also coming from the customers. It is showing a big positive trend. So while the overall challenge remains in the industry, I think the trend is looking favorable.
Okay, and fourth quarter also ideally should be higher volumes because supplies are further improved. Would that be fair assumption?
For the immediate short term, what we have, visibility in the EDI, it looks better. But as I said, there are surprises which keep coming all the time.
Sure. That's true. And thanks. And then last question with respect to the financial reporting. So would we be reporting the new SAMIL financials going forward from fourth quarter, given that large part of the entire restructuring process hopefully will be done by the financial year end? So the steady reporting which happens, would that now be just for the new SAMIL?
Kunal, can you take that, please?
Yeah, Dinesh, it will be for new SAMIL and MS will separately from quarter 4.
Great. Thanks for the clarification. I'll fall back in, please. Thank you.
Thank you.
Thank you.
The next question is from the line of Raghunandan from Emkay Global. Please go ahead.
Thank you, sir, for the opportunity, and good to see the sequential performance improvement. Sir, couple of questions. Firstly, Europe gas energy costs seem to be going higher as highlighted by some of your peers. Has there been any impact on margins? If any color you can share on how big is the impact, and are you seeing any reduction in these costs?
Well, I let Vaman answer this question, but basically, we are not a huge power guzzler, but Vaman, could you take this?
Yeah, sure. Definitely there have been energy cost increases, which is substantial. Definitely the impact, like Papa is saying, is different for different verticals. Obviously, wire harness side, not as much as perhaps some of the other verticals that are there. These costs are unusual and have spiked in the last couple of quarters. We do believe that in the longer term, these prices should come down and settle. But in the meantime, we are putting in places and countermeasures to, let's say, get efficiencies from other places to be able to get back the returns that we are losing because of the higher energy costs. But like I said, we believe that in the longer term, this should come back to a normalized level.
Thank you. My second question is for the new SAMIL, pro forma numbers have been given. Would it be possible to share the net worth and gross debt for the entity? Was trying to calculate return ratios.
Kunal?
Yeah, the gross debt numbers can be imputed from I guess what's there on slide 24, which is the net debt, and if you look at slide 18, which has the gross debt component, the net worth piece is something in the works. It's just happened on December 31st, so we will come back to you in Q4 with those details.
Sure. Thank you, Kunal. I'll come back in the queue. That's all from my side.
Thank you. A reminder to the participants, if you have a question, please press star then one. The next question is from the line of Siddharth Bera from Nomura. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So my first question is on the margin performance in the standalone business. So if I look at the trend between standalone MSWIL margin performance and MSWIL margin performance, it seems there is a difference because the standalone margin seems to have dropped quite sharply on a YOY basis, flat QOQ, but DWH performance has been, or MSWIL performance has been much better. Any thoughts here? Why is that, and what can be the sustainable margins to look forward to?
Kunal, would you take this, or Robert?
Yes, sir, I will try. And so, Siddharth, DWH is catering to the domestic market customers where we have a pass-through of the copper as well as of the foreign exchange. While in the quarter 3 also you have seen compared to quarter 2, there has been an adverse impact of copper, but the impact is minimal. At the same time, globally, some of these contracts are half-yearly or have a different terminology. Also, you have seen the euro has weakened in the last quarter. So the overseas business margins move in a range because of the fluctuation in the foreign exchange rate. So that is where you can see the marginal change in those rates. But on a business side, I think the business continues to perform well. There could be increase in freight cost, both incoming and outgoing, which will have a larger impact on the export business.
But in general, sir, in the standalone MSWIL business, also a large part comes from India only, if I see, 10 billion out of 13 billion. So is there any difference in the product profile margins between these two businesses also?
No, sir. There will be the sale of wires, which will also get accounted for in the ex-DWH business on a gross basis. So when the copper price has moved up, while there is a compensation coming from the domestic customer, both MSSL and Kimmel, to the wire factory, but as a percentage, it will show mathematically a decline. But from a business point of view, there is no change.
Okay. Got it. And second question is again on this standalone business. So like we have shared in the SMRP business, our the EV share of revenues is closer to 3.5%, and we have shared in the past like 25% of our order book is coming from EV. In an India business, will it be possible to share any of these numbers either in the order book or in the revenues or your aspiration, if it's possible?
Siddharth, we are in the process of relaying out our presentations and how we will present to you, and that is in that direction. We also presented you the EBITDA margins for our different business verticals. And so we take your inputs and would look how we can give a data without impacting our strengths.
Okay, sir. Okay, thanks a lot.
And if I might add, I hope you've taken note of the EV data we have provided in terms of it now being 3.5% or more than 3.5% of our consolidated sales. So what was around about 1,100 crores in H1 is more than 1,900 crores now.
Yes.
Thanks.
Okay.
Mr. Bera, do you have any more further questions?
No. I am done. Thanks. That's all.
Thank you. I'd like to remind all participants present in this conference, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Joseph George from IIFL. Please go ahead.
Thank you for this opportunity. So when I look at the consolidated numbers, there are 5 segments, right? There's standalone, SMR, SMP, PKC, and others. And in this others, there is a significant it's a small segment, but there's a significant deterioration in profitability. Does this others primarily include MWSI, which would have seen a similar trajectory or similar impact as you have seen in PKC? Is that a correct conclusion to make?
This related, you're talking to about wiring harness, is it? So, Kunal, can you?
So, Joseph, are you referring to the Tamil details?
No, I'm talking about the segmental revenue and segmental results as per SEBI format, where you have 5 segments: standalone, SMR, SMP, PKC, and others. So my question is the biggest component in this others MWSI, and has MWSI seen a similar, margin impact because of operational costs, etc., as you alluded to in the context of PKC? Of course, the China angle is not there, but the rest of it.
Okay.
This is the rest of the world, so some of the businesses which are in 100% subsidiaries, not MWSI, so they have decline in the profitability, particularly from Europe, but we will get back to you in detail on this.
Thank you, sir. That's the only question that I had. Thank you.
Mr. Joseph, the thing is, we have now virtually 4 wiring harness systems. So, your question is pretty vague on which one are you asking about. But we have domestic wiring harness business, which has now come out with a different company. You have PKC, you have MWSI. Then you also have a wiring harness business, which is supplying to our own companies and also exports out of India. So that's the reason, you have to be a bit more specific. But I understand you're referring to one of the pages of our own presentation. Okay?
Sure, sir. Thank you. I'll take it up with the team one-on-one. Thank you.
Yeah.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. This is a reminder to all participants present in this conference, if you wish to ask a question, please press star, then 1 at this time. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead. Mr. Chirag Shah, you may please go ahead with your question, sir. Your line is unmuted. Mr. Chirag Shah from Edelweiss, your line is unmuted. You may please go ahead with your question. As there's no response from the current participant, we move on to the next question from the line of Vinay Singh from Morgan Stanley. Please go ahead. Mr. Binay Singh, you may please go ahead with your question.
Hi, team. My question has already been answered. Thank you.
Thank you. Before we take the next question, a reminder to the participants again, if you have a question, star then one. The next question is from the line of Chirag Shah from Edelweiss. You may please go ahead again, sir.
Yeah. Hi, am I audible? Thanks for the opportunity. Hello.
Yeah, go ahead, please.
Yeah. Sir, so just a follow-up question on SMR TV or SMR and SMP profitability. Would it right to assume that the drag on margins when we look at on YOY basis or versus the historical performances is large? And if that is the case, then if you can help us understand how does the pass-through arrangement work, and where can we see this under recoveries neutralizing or normalizing, assuming there is no significant further cost inflation?
Vaaman, would you like to take that?
Yeah, Chirag, it's different by the different product group, as you can imagine, and you know that different countries, different customers, different product groups, so contracts are different in those different geographies and companies. Definitely at least I can start by talking more generally, and the team can support for the individual companies if you have more questions. But generally, the thing is, Chirag, that at the end of the year, we go back, of course, to the customers, and then we talk about the movements in the prices of commodities, etc., over the year. And of course, that happens on measured on a quarterly basis. But depending on volumes, depending on these price movements, depending on agreed price downs, etc., all of those are factored in, and talk happens with the customers to see what is fair and what is right. And a balanced approach is taken. So, we do envisage that, again, towards the end of this quarter, a lot of those things will come back to normal. And moving forward, at least the huge aberration that we have seen, not only in the commodity price, but like Pankaj sir was also talking earlier about, labor increases, etc. These are all things which are really out of our hand and out of the supplier's hand, and these are things that we normalize in discussions with the customer, and they are, a negotiation that takes place at the end of the year. So, we are moving from a period of high volatility, and hopefully some of the worst is behind us. We're moving, we've always said that we are cautiously optimistic, and you have seen that uptake in the quarter on quarter, and we hope that trend continues, and that there is more stability moving forward. But this is quite unusual time with everything kind of spiking in the last couple of quarters, and those and the customers are definitely open to having those discussions with us and seeing what is the fair outcome of what happens down the line.
But this is helpful, Vaaman, but would it be right that generally Q1 of the calendar year is the year where you have this discussion with your customers, or a large part of customers, given different geography?
It is a running discussion, but it is happens more because there's a lot of other things that are also happening, right? The price downs for the year on year, so those kind of all those things happen generally towards this during this time, and they take a balanced view for the entire year. But of course, during the year, if there is a couple of quarters where there is extreme movement, we have those conversations then at that time as well.
This is helpful. And the second question was, if I take SMR as an example, there was a time that we were doing 400 million euro consistent quarterly revenue. So, in your assessment, by when can we go to that number, given the supply chain bottlenecks and your interactions with your customers, when that normalization could be achieved? Because before the pre-COVID, we were consistently doing 400 odd million revenue quarterly basis, plus or minus, So, based on your best assessment or best guess, let me use that word, is it a 12-month away scenario, or how should one look at it?
Look,
I think 3 to 6 months. Sorry, go ahead, Vaaman.
Pawan, I think you mentioned it. We are hoping that again, next 6 months things are a lot more stable as where we see them right now. There's still a lot of stop and go because of the semiconductor shortage, etc., which is still there. We had also said that in the last call that we do see it hanging around for another couple of quarters, and hopefully by then things should be a lot more stable.
So this is by H2. Let's hope that most of the issues are behind it. We start doing the steady run rate that we were doing earlier. It's not better.
We hope so too, Chirag, that things become a lot more normal moving forward.
Okay, this is helpful. Thank you very much and all the best.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. This is a reminder to all participants present in this conference. If you wish to ask a question, please press star then 1 at this time. Participants, if you wish to ask a question, you may please press star then 1 on your touchtone telephone. This is a reminder to the participants, if you have a question, please press star then 1. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Vivek Chaand Sehgal for his closing comments.
Yeah, thank you very much. Look, I think this quarter, under the circumstances, was very tough, but yet we have delivered better than expected results. And I think the effort is going to continue even harder in the last quarter that's coming up now. We are generally seeing positive response coming from the customers. Also, the opportunities on acquisitions is increasing day by day. So let's hope we can share some good news. And Chirag, just for the reference, you said, I hope it comes back to normal. Well, we think it's going to go beyond normal. So wait and just see. The best is yet to come. Thank you very much.
Thank you very much. Ladies and gentlemen, on behalf of Motherson Sumi Systems Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.